Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's October 26th. For the most part, today was just a tight trading range. Most of the price action stayed within around 2061 up to around 2067, and the highs were real obvious. The lows continued to kind of get higher as the day went on. We started out looking for the lows down here. We got the most touches with the closes right along this 20, just slightly below 2061, maybe 2060 and um, 3/4 there. So really, all you can do on a day like this is just draw your short-term trend lines and watch them play out. We had one coming down. It's kind of questionable if we got a close outside here. If you come right off those first couple, it looks like we had a close outside. Um, then a move to a new low, and then we found that support right across here, bounced. We got a break here, a move to a new high. We've got one coming down. We got a break, a new low. We got one going up, a break. We didn't get a new high because we couldn't get through the high of the range. Then we're moving down. We get a break, and we move to a new low right before the close. So it pretty much played out as you would expect. And sometimes there's shorter term. As you can see, there's a shorter term trend line working up here. A close outside, a move to a new high, and then we move lower. So just remember there's a shorter term one here. This larger one was not as clear, but this one's real clear. We're working down. You get a close outside here and two measured legs to a new low, and then we reversed. Really what you just have to do here is kind of wait on your trap, your reversal pattern type trap before you go in the other direction in most cases. Generally off the top, I like to wait on a failed, not the first entry off the top, but the second entry. And notice we made a double top and then kind of got the chance to go lower there. Not a lot of trades today. It's just a tight range. Prices are consolidating. We had a really big move up last week, and so prices are just consolidating today. That's really what it looks like here. So let's back out. Talk about the trades that I saw. First trade I saw, it's tempting to go short here, and you probably could have if you wanted to. It's right at the open. Generally, they kind of try to trap you right at the open and fool you a little bit. And they did kind of fool people to the upside. But if you understand price action, that you shouldn't get fooled here because you got a double top and then a lower high here. Your signal bar is just a big doji 1 bar trading range. There's clear resistance here. We got two legs up, two measured legs up here. So lots of reasons to be leery about going long right there. Plus you want to draw your trend line off those first two swings to see what happens. It kind of confirms it here. Normally I wouldn't like this signal bar, but this is a failed second entry long. Notice the new high, pull back first entry, pull back second entry. So it's a nice second entry long trap. And notice that, you got a double top right there. So you got resistance, strong resistance right there. You can't go long into that, especially considering that's the third swing up. So I like going short there on that long trap. It comes back. It tests the trend line again. It's like a little breakout pullback short because we do have some overlap in there. It's a big bearish reversal type bar. Just go short right there. You guys could get in this one a tick or so back. And then we bounced again off the EMA. And this is also the same thing. You could also treat this kind of like a failed second entry long because you got a double top here. So you can treat that like a new high. That's a first entry, pullback second entry. So there's several different reasons to like that one right there. You get another pullback right here. It's a first entry. There is enough room to get out before you get down to this low here. But the fact that we bounced right in there a couple of times before, I would be real leery of that. And you definitely don't want to go short right there now that you're getting the resistance across there or the support across there. And then you get the kind of a failed break lower. But again, I don't think you want to go long here either. We do have a possible break. Just depends on how you drew your trend line. It does tend to fit in there pretty well. You can see that clear 2 tiers right there, and the midline's working both ways. But it's just not, you don't really have enough evidence here to assume that for sure you've got a reversal in place, although you do have some pretty strong support. So wait and see if you get a reversal pattern. And look what happens. We come up and we don't really get a whole lot of resistance there at the EMA. We push through. When we get to the trend line, yes, we get a little resistance. It pulls back. It tests that same support area again. It bounces. It's tempting to go long there, but I think you want to wait on a little better setup. You actually get a failed second entry short right here. Technically, it's not on this chart, but that's one leg up, pull back, and then a second leg up. It does turn down, and it bounces right off that support again, but it's just not a very bullish bar. So the odds are it's going to pull back again. So when it goes higher and pulls back again and bounces and gives you a little better setup, I like going long right there, because now you got a double test of this area right in here, and each swing high is a little lower, so you're getting good support and you're getting lower highs, and the closes are getting lower. And I really would have liked this one better if it would have ticked lower there below this bar and then turned up, but I still think it's good enough there if you want to take a long. You've tested this support multiple times, and then you get a, and there is some resistance across there, but you know, we've got this somewhat of a reversal pattern in the trap here, so I like it. You do get a breakout pullback here. You don't get a setup, but you get a second entry here, and this actually confirms the trend line, and this just further confirms it. So I really like this second entry, and if you're still in this one, or if you waited on it to come back to enter, this is one I like adding on. If you're not already in, you can feel free to add on there. That's, somebody asked me about that the other day. There's no rules on adding on. It's just if you get a setup like this, and you don't, and if you got to be really confident that you're reading it right. But a lot of times you'll get an extra setup. It'll come back and give you another setup, and if you hadn't scalped out, you can just add on if you still like what you're seeing. And right here, you got to like this because it's a new high, pullback first entry, pullback second entry. It's a nice bullish reversal bar right off the trend line, right off the EMA. So I like that one. It comes back to the trend line again here in the EMA, but look what happens by that time. You've got a trading range, and you don't want to go long at the high of that trading range because we got resistance, and there's some resistance over here from before. So you just kind of got to sit on this one. This is one of those areas where I really should, this is one of those days really where you just got to be patient and wait on the better setups. So I'm going to change the color of this one to the burgundy color, because that you don't want to enter in that. You don't even really get a failed break until here. So, but this is kind of a range day, and once you get the failure, you're still got a break of this trend line, and you're expecting a possible retest of the high. But notice what happens here. You break lower, and it doesn't really shoot back up. It does come back up, but you get a lot of overlap here, and you really just have a two-tiered almost. And that's a measured move down basically there, and then it comes back. And then this is why I like entering. It comes back and tests that area, and then you get that nice second entry long that fails and turns down. Look how bearish it is. So I like going short right there. And if you wanted, you could attempt to use a limit order. But if you're in already and it pulls back, this is another one I like adding on again right there, because now you got a failed second entry long counting from the high. And you're probably going to trap people, and you got enough room to get out before you get here, which is where you expected that it's probably going. And notice what else it does here. It breaks higher first and goes out the bottom. So just go short right there. And that's a quick, easy scalp. You get just enough to get in and out of that one. And then it bounces. And look what happens. You get that. You got this little channel working down it. And you really could have seen this one a couple of ways. You could have even seen this one a little steeper right here. Like so. it fits either way, and you really come to the same conclusion either way. You get the break, but you get a break in a new low there. That might have tempted you to go long right there because you did get a new low. That's the only thing about seeing it that way. You still really get the same outlook. You got to be careful. If you saw it this way, you'd have to be careful entering in here, because on this one, either way, if you saw it this way, I'd be more tempted to say, hey, you just need to sit tight in here. And it might have been smart to sit tight, but when you got that trap right there, I like going short because we just came off the high side and we've got one nice leg down. So we're looking for hopefully a measured leg down here as well from here. And you see we got basically a perfect measured leg down, maybe by a tick. We actually went one tick further. So this was a nice setup. And then notice what happens. It reverses. Look how it goes right through that EMA. That's a sure sign that you're going to get hopefully get a reversal pattern. You can see that trend line working up there, and we bounce right off of it. It's a first entry counting off the highs, but it's a second entry from here, and you got room to get out before you get up here. It's a little small bar, but I like that reversal type pattern. Just go long right there, and this one takes on off. And then we already kind of talked about this. We get the double top up here after we've already turned down a couple of other times. Take this. This is your first entry. It's a good bit away from the EMA, but still, you don't want to take that chance. You want to wait and make sure you get a lower high or at least a double top or something, and you get that. And you get a small bar. You're still a good ways away from the EMA, so I like that one. Hoping, and look, you get the reversal pattern back this way. It shoots right through the EMA, comes back. Test it, turns down, and that, even though it's got a little green, that's a big bearish bar. Look at all it, because it traded way up here and ended up closing down here. Just go short right there, and it's right off that trend line, off those first couple of bars there, and boom, off it goes. And that was really it for the day. We looked like we were going to get a reversal pattern here, but we just kind of went into another range, and then that got you into the 2 o'clock hour. So there just weren't a lot of trades today. 1, 2, 3, 4, 5, 6, 7, 8, 9 that I really like. And even these could be questionable because you could almost look at this like a 2-tiered channel. But really, the way I was seeing it was we got this break. You moved, you got one leg down, so you're looking to go to the other side of the range. And that's what always throws people. You got to let it play out. But you got to kind of understand what you're looking for. Once you go to the top of a range, what usually happens, you're going to go to the lows. And then once you reach the lows, you're going to try to go to the tops. And if you try enough and fail, it's going to go to the lows again. And if it tries enough and fails on the lows, it's going to try to go back to the highs again. And it tried and tried here, and then it heads back up. And then it's trying to go lower. Multiple times it does going lower. So just remember that. A lot of people really struggle on these kind of days. I kind of like range days, especially when you get the multiple touches off the lows. We didn't get that today. The highs were kind of climbing each time almost. So you didn't get a lot of setups off the lows. You got most of them. You really didn't get a lot off the highs either. But you got this one, and this turned out to be a really good trade right here. So this one was a pretty good. Most of your better trades were to the downside. The ones to the upside didn't move very far. This one wasn't a bad trade here, but you just kind of had to be patient and just kind of ride it out and kind of play the range rules and look at the short-term trend lines. Somebody sent me an email and they were looking at kind of a dueling trend here, but I'm not sure that it was. There's actually I think he was looking at it like down here maybe. And if you see that, there is kind of a channel working up through there. But I didn't play that at all. You can see there is a channel there. So if you'd have seen that, that might have tempted you to take that trade. You might have got one extra trade out of it, this one right here, and you could have really circled that one green anyway. So it doesn't really change anything. But this one, I believe, played out regardless. So but he was looking at it like they were fighting each other, and they are to some degree. So that's a good eye, because I didn't really play that one. Even though I saw it on his email, I still didn't like it. I just played the range. And it seemed like there was one other thing. Somebody mentioned in one of the, um, made a comment on one of the videos about fib uh, fib levels. And, you know, really a lot of these measured moves that I draw, there's more to them than fibs, but yes, he was definitely correct that there is. You can see that measured move, and then you're looking for that one. It's basically a measured move. And there's smaller ones within here as well. You get the measured move right here up, and then when your next leg starts up, you're looking, and that's basically where we got, and tried to go lower and then trap people, and it pushed up. This is kind of went in that range and then went down again. We already showed you those two measured legs, and so he is correct that there are fib levels involved in this. But you don't need to complicate it with trying to learn about fib levels, and it's just so much easier to draw your measured moves. And there's more to it than measured moves, because there's a time value in there as well. The time value does not work as well for volume and tick related type charts. The time level comes in more or less if you're using a time-based chart. So in other words, when you see this swing right here, just draw you a line right there, and when this starts heading up, move this to the top of the swing, and that's your target right there. And notice what happened. We got there and it turned down multiple times. And if you're on a time-based chart, you'll look for, actually that's getting too complicated. Don't worry about that. But just understand that there's more to it than just fibs, although the fib levels do come into play. The extended moves on the reversals. Most of your reversals, your best setups are going to be, or your corrections are going to be about a 50% correction. And if you look at this move up, we came back down, and 50% is right in here. And that's where most of the reversal happened all day. And we already showed you the measured move up. So just remember, that's the most important thing you need to remember about that. And if you were looking for a measured move there, it would be up in this area on that first leg up. But we never could get above that resistance level right there. So just remember, the most important thing to remember is that most of your corrections that reverse about the 50% level tend to be pretty good moves forward. So see if we can find another example here. Well, even at the smaller levels, look how this move up, and you get about a 50. This is your move up on this one, and you get about a 50% correction, and you get a second entry long, and it takes off. So if you see those second entries at 50% correction, and this one went a little more than 50, this is your first move up, then it corrects back. This one's more in the 60% range, and then you get another move up, and then you get your second entry at that same level. So that kind of gives you a little bit more leeway of expecting the trade to work, so to speak. So if you want to read about fibs, you can. I don't think it's necessary. I don't think it's that important to even understand what it is. You just need to understand that most of your corrections reverse again around the 50% level. So if you get a big move down like this and it comes back about 50% and you get a good short setup right there, that's probably a good indication that you're going to get another move down. Notice you don't really get a setup here. You get a first entry, but you got a trend line working up too, and you get a first entry and you never get a second entry. So this really turns out to be your move, and then so watch for about a 50% correction here coming back, and that's pretty close. We went a little bit further here, 50 to 60%, and then we bounce. So just something to think about. Since somebody brought it up, I thought it was worth mentioning. Several people have told me that putting the fibs on there helps them. Honestly, everything you need to know is in the price action. It's so much easier just to use a quick line on your measured moves and to put all that stuff on there and let it confuse you. But if it helps, put it on there, because I'm a big proponent of what makes you confident and comfortable in your trades will always help. I'm not going to go into a lot of details about fibs because personally, I don't want to complicate it for people, and I don't want to give them something that'll talk them in and out of trades. Um, if you want to use the measured moves, I think it's wise, and there's actually more to those measured moves than just fib levels, so keep that in mind, and that's why I like them. Um, they're pretty telling. So not much else I can say about that, and I really don't want to get into a lot more details about it. So, but I'm going to wrap it up. We'll be back again to do it tomorrow. Hope you had a great trading day, but I'm out of here for today. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.